And that means we are live now on our YouTube channel, Tackle Trading's Halftime Report, daily show where we go through the markets, the news, the charts, anything that's on our mind that we feel like we can bring insight to you guys out there, Team Tackle, and have some fun while we're doing it. On today's show, we've got earnings roundup. I got a bunch of companies that actually reported last night after the bell, today before the market open as well. We're getting some price reactions to it. We're going to take a look at Ameritrade, TMO, ABB, Biogen, other ones as well, including Texas Instruments, which did give us some insight into tech and whatnot. We'll take a look at that during the back half of our show. Some stuff going on in Houston, obviously, with the consulate and the U.S. government and China relationships kind of deteriorating here. We'll get Mark and Matt's take on those kind of things. Crude oil inventory numbers came in as well, and quite a bit more. We'll get through it as we go through the show. Today, by the way, we've got Matt, we've got Mark, and we've got Cody on the back end. The regular crew here is, here to have some fun. Matt, how you doing, sir?
Tim, doing really good. Excited to be here with the team to break down the news of the day that's driving the markets.
And a couple things before we get started. Tonight, we have our Wednesday webinar series that we've been doing here for a couple of months. And Coach Tyler Craig, Matt, he wrote the newsletter over at Trading Justice for the month of July on the gods of the option realm. And we had some fun talking about it. And it's a wonderful piece. He's actually going to be doing our weekly webinar series on that topic here tonight. And if people have not read that newsletter yet, like you're showing here, Matt, go to tradingjustice.com, find that newsletter tab at the top, and then you can find the most recent post. This was a fun one, Maddie, and I'm looking forward to seeing how Tyler's going to teach it tonight.
Oh, no, absolutely. One thing I love about Tyler is he's so creative in how he teaches people. And I just love the write-up. I've read it twice now. I might read it a third time. It's just an amazing. I just love Tyler's writing so much and how creative he is from that perspective. And for those of you who don't download the Trading Justice newsletter and you want to get it to your email every single month for free, just click on our free newsletter, put in your name, your email. We'll send you a copy in a PDF every month.
Yeah, he is a wonderful writer, wonderful coach, wonderful teacher. Looking forward to it tonight. If you are a veteran of our channel, you know those Wednesday series, the way we do them. We're going to be going live 7 o'clock Eastern Standard Time. But come and join us. Be a part of Team Tackle. Come and support Tyler and learn a little bit about options and the way he's going to be teaching that. Let's get down to business here today, Maddie, if we can. Lots going on in the market. Let's start with technicals, though. Not a very big market response today to any of the news. It's just kind of fading higher. What's your read on the chart there?
Well, a little bit of a lukewarm, market day. I mean, you're reading the news today, and you got some major news on China, and I'd like to get Mark's take on that with the consulate being shut down. I mean, it was fascinating last night. I was kind of going through Twitter last night and start seeing these news reports of, Mark, you were kind of seeing the same thing. These police reports on, fire trucks going to the Chinese consulate in Houston, and it's like, what is going on? And it almost felt like a spy thriller this morning. Honestly, the first thing I was thinking about was, is Brad Pitt, starring in some movie somewhere? Like, is something happening here?
Matt, I was getting my bug out bag ready. I was like, all right, here's my route out of the city. My bug out bag ready. All right, where are my kids? Get my route. Like, how over leveraged am I in my account? Will I have to? Oh yeah, it was 11 p.m. last night in the Justice household.
Yes, everyone needs a bug out bag.
Yeah.
Hey, y'all got those earthquakes there too. Y'all need bug out bags. Everyone needs a bug out bag.
And listen, I wasn't getting the bug out bag prepared. I was like researching on Netflix, what spy movie can I watch tonight? I mean, it's just, it was fascinating. China, burning documents, the U.S. saying we're going to close down the consulate on Friday to protect intellectual property rights. I mean, I would say shots fired, but I mean, they've kind of been firing for the last month or so.
No, and if you don't know what we're talking about, so about midnight Eastern time last night, there were reports that the fire department was surrounding the consulate in Houston, the Chinese consulate in Houston, because of a fire. And then aerial coverage showed that the Chinese, personnel in there were burning documents in these big, huge barrels. And Twitter was going crazy. It's like, hey, isn't this what the Japanese did in, before they attacked in Pearl Harbor and that? And then we found out shortly after that the U.S. is kicking China out of Houston, of their consulate, which is, this is dramatic stuff. It really is. But hey, market's up today.
At what point do you think the market will start to care about this stuff, Mark?
I don't know. I mean, Mark asked the same question, and I'm like, if we don't care that China's burning documents in the middle of the night and the U.S. is closing the consulate, do we ever care?
No, I mean, that consulate was the first one established in 1979 when the U.S. and China officially reestablished diplomatic relationships. I mean, it doesn't happen every day where two nuclear powers, one of them is saying, we're kicking you out. I mean, if there wasn't all of the other insane things going on, if this was a normal market, I mean, this would create a market reaction, but nothing in China has. So I don't know what it will take, right? Like a ship getting blown up, probably not until like the trade war, like, we're not doing the trade anymore. I mean, it's fascinating that the market doesn't care at all about these deteriorating relationships, but it doesn't.
Yeah, I just don't think the market participants, right, wrong, or indifferent, I just don't think they believe it will deteriorate further. I think they think it's all smoke and mirrors and chest pumping and all that kind of stuff.
Last night.
There was literal smoke last night.
That's right. I don't know when they're going to care about it either, because they clearly don't. I mean, this has been going on for months and months and months and months. Different rhetoric, different actions, different things, and whatnot.
Well,
the market keeps plugging away.
Let's speculate here just for a second. I mean, you're right, Tim. I personally don't think it's going to escalate to a degree that I would personally be concerned about. So what could that escalation be? I mean, it's just words right now, but now that, the consulate's shutting down, there's more than that, but we still haven't seen them rip up the phase 1 trade deal.
That's right.
Right. I mean, until we see that occur, I think the market's just going to take this as, two superpowers just throwing jabs at one another for right now. But until they do something with the phase 1 trade deal, until they rip that up, or until they see a revision of it to a certain extent, the market's going to take it in stride and keep on chugging along.
Yeah, obviously actions like that, like a rip up of the trade deal or something in the South China Seas, Mark, like you've kind of talked about, we've had conversations about internally. If something did happen there, obviously the market would respond to it, and it could be violent and quick. There's no question about it. My personal opinion on all of this is that the U.S. is kind of just drumming up rhetoric because of the political season. That may or may not be accurate. That's just my perspective on that. I think they think it's a winning issue to have this anti-China kind of rhetoric going out there, and they're pushing on that. So I kind of just dismiss it, to be honest, guys. I look at the news. I'm interested in it. It pulls me in. I like having conversations about it. I didn't see the images from Houston on the burning and all this kind of stuff. Sounds like that one was a fun one, but it feels like something that you can dismiss a little bit. I don't know. I might be wrong on that. Mark, I know that you have a much more risk kind of measure here. You think this could actually turn into something a little bit bigger than I do, but
once again, I'm the most paranoid of the Justice Brothers. I see the worst case scenarios always. But the China thing is not new, right? This has been going on for months, as far as little step, little step, little step, little step.
Not even months, Mark. I mean, this dates back to January 2018. Right. I mean, how many times during that 1.5 to 2 year stretch when we were going through the hot and heavy trade war with China that shots were fired all the time, words, all of this stuff. So I think the market's a little bit used to it between the jabs going between China and the US over the last couple of years. And until something bigger happens, and again, kind of like that trade deal, a revision of the trade deal or something along those lines, you're right, Mark. I would say you're the most paranoid of us. I would say I'm second, and Tim's just like, I don't care about your guys' paranoia.
You guys are 1A and 1B, and I'm like G. I'm way down the list.
Oh, no, I don't think G. I think it's Z. There's a Z. That's where you are.
The nuclear bombs could be flying, and Tim would light up a cigarette and like, man, that's a pretty shooting star. He'd be
like, hey, those fireworks. They're really
Hey.
good last night, weren't they, Matt? I'm like, they weren't fireworks, T.
When you guys said bug out bag, I literally had to look up what is a bug out bag.
Oh my gosh! You literally, the milkman
Cody's so offended
inseminated
right
our mother, and you were
What?
born. Like,
Cody's like,
We've
you
had
just
so
offended
many
every
conversations on. Oh my god.
I actually looked up also what goes into it. Mark, there's 95 items on the list. I'm going to send it to you as well.
listen, my last two thoughts on it for the
Taking
next
your man
hour at
card
least is China is a concern to me. I'm buying more canned goods and protection on my portfolio. So that's my last thought on the matter.
Little hedge, nothing wrong with that. Little hedge is definitely appropriate whenever you see a time of risk. I know that you, Mark, are concerned about some kind of disruption because it can expand margin on naked put trading, and that's kind of the basic way.
I mean, that's the thing. I mean, whether it's the stimulus talks not working out, or China, or goodness knows some unknown thing we don't know, like you never want to be over leveraged. I mean, it can just cause havoc. You know, you still trade, still do your thing, but just don't be over leveraged, because if you ever have a quick market correction for whatever reason and you're over leveraged, it can just create a mess. So just, man, and that is true on July 22nd, 2020, and will be true in February 11th, 2036. Just always watch your leverage and have a plan and be responsible with it.
You know, I think it's a very good point. Go ahead, Matt.
But again, I mean, China was all over the news today. When the news started coming out last night, we had about a 1% drop in price. It recovered before the market really even opened, guys. And so, yeah, China's all over in the news, and it's hot and heavy in the news almost every week in the last few months. But this market does not care about it. It just doesn't.
Yeah.
And until the market wakes up and starts pricing it in, we got to take it with a grain of salt to a certain extent.
100%. But I do think that the exercise Mark did is a very important thing to do out there. If you are a naked put trader or an option trader in general, you have to, and we're not going to teach that here today on a halftime show, but maybe in a lounge or something, Marky, you could cover some of this. You got to be able to do a margin check. If you sell naked puts and you're using a margin account, you have to know that the money that you're holding is not necessarily constant. If the market starts going down, they're going to require more money for those naked puts. And one of the most important principles out there for any option trader: position sizing, risk assessment, risk control. And Mark, I know that last night, probably at 1 o'clock in the morning, you were doing a margin check. Is what you were doing.
I mean, and we saw this in March when the market was going down and gold and silver were getting killed. When it's like, with all this volatility, and Matt, he was the first one to guess it, and it's the first one I heard anywhere. I mean, right off the bat, Matt was like, dude, this is margin calls. And because margin calls can just create havoc if people are over leveraged.
Yeah.
Well, and a very simple rule to kind of understand, or a principle in terms of understanding your margin on naked puts, just position size to take ownership.
Yep. That's right.
At the end of the day, position size in the worst case scenario, that if you do have to take possession of the instrument, your position size to do that.
And you'll always be good if you do that.
Yep, I agree. All right, let's keep working through the news here today, guys. Obviously, we're going to get the earnings.
I got to say something to Adam and Swin. So Adam comes out there and puts out a joke and says, "Silver is the new Tesla." And Swin's like, "Where's that show again? I want to watch that show." Hey, Swin, Tim and I were doing it last night too, buddy. I was like, "Tim, I need a new show. We're all looking for a new show." I would watch the show called Silver is the New Tesla. Whatever that is, I would watch that show as well.
Dude,
number one ranked on Netflix. Silver is the New Tesla.
Hey, if you want a new show, I'm watching Better Call Saul for the first time. And oh my gosh.
You're
absolutely
late.
I've been pitching that to Matt for years. He's
it is
behind.
an A+ enjoyable.
Did you catch up? It's incredible, Mark. I actually think it's better than Breaking Bad.
It is so
I'm going to
good.
say that. I know that would be for Breaking Bad fans, they'd argue with it, but we're not going to argue right now.
Yeah.
If you've got a great show out there, there's nothing more glorious for somebody who works from home that doesn't watch a lot of cable television. If I can find a new show to binge on, like Netflix, Matt, it's one of my favorite moments when you do find something you actually want to see. I'm still working through.
Adam tells us it's Silver's the new Tesla. I'm in 100%. I'm in.
By the way, Silver is the New Tesla could be the name of our halftime report because we've been pumping that for quite some time.
Swin, I'm with you. Adam, so Swin's out there Googling Silver is the New Tesla. And I'm like, yeah, I totally get it. We're all looking for new shows.
Yeah. Yeah. Let's get down to the news here today, guys. There was some economic data that came out. There were some other things that we were talking about, but really, quite frankly, the most important thing on a day-by-day basis is going to be the earnings reactions to these individual companies. I did see some data come through for home sales, Matt, as well. We can start wherever you'd like. I mean, the charts are quite interesting.
I mean, let's start with the record-breaking numbers here today, right? And new home builders today got a nice little bump. Let's take a look at the home builders here. KB Homes, nice little bump above the 200-day moving average on KB Homes today. Toll Brothers, another really good home building company that we like, breaking up above that 200-day moving average as well with the increasing pivots. You have DH Horton, Tackle 25 stock. DH Horton breaking out of an all-time high here today in front of earnings. DH Horton, keep that on a watch list. That's our favorite home builder coming into 2020. But existing homes, here's the economic news, and this is what really kind of drove the home builders here today. And I love DH Horton. I wish earnings weren't coming up tight. But the home builders, existing home sales. Now take this, guys. Think about this for a second. Existing home sales jumped nearly 21% in June. Okay. Now, 21% in a stock, that's nothing. 21% in the housing market, that is a record number for increasing sales in a month from the I believe the May reports coming into the June reports. You know, and honestly, largest monthly increase in existing home sales in our history. And the home builders are enjoying the price action here today.
I feel like that's pent up demand. Honestly, I feel like a lot of the economic data that we've been getting for the last 2 months, they're going to have over the course of history, Matt, they're going to have asterisks next to them. Yeah, that was a record, but this was after the lockdown, the pandemic, and all that kind of stuff. Obviously, good numbers for home builders and DHI right there. What a beautiful chart. We had that on the report, I think, 2 weeks ago on that breakout earnings coming up here in a little bit, and a wonderful fundamental company like you talked about. Tackle 25 stock, but we get these numbers, Matt, quite often, and it's a record, right? But I'm just like, okay, yeah, but you got to take it with a grain of salt a little bit, don't you?
A little bit. I mean, when you're looking at the numbers here, I mean, obviously, when something gets just absolutely butchered like this is the pandemic. Obviously, in March and April, nothing was happening here. You really found that bottom in May, the June report, and then that massive increase coming back up. I mean, it's what you want to see. The question I have for you guys is, since this pandemic, we've been asked the real estate question quite a bit. And although none of us are real estate experts, we do trade in the housing market, within the stock market. And I believe, Tim, Mark, I don't want to put words in your mouth, but it seemed like you guys were not nearly as concerned about residential housing as you were, commercial property, correct? I mean, that's kind of been the concern here. So is there anything in the data that you've seen recently that will change your opinion of housing in general from a residential versus commercial perspective?
No. And I mean, think about the commercial leases and whatnot. You're talking about business activity. One of the big concerns, obviously, is people going bankrupt, like retail stores and those types. These companies that were dependent on those contracts, now these companies can't pay them. So the commercial side of it, I'm still completely out. I'm staying away 100%. Yep. On the residential side, I mean, what do we know about asset prices over the last 15 years? Through all of these QE bubbles, since the financial markets crisis, literally even right after the tech bubble, when they started making everybody in America should own a home here, Matt, residential real estate prices go up and up and up and up. And if you think about it, it is a risk-on type of asset. People aren't selling their houses right now just because of some coming economic collapse. Now, maybe that economic data gets really bad in the future if we have other problems, but that's all speculation as well. I think real estate prices are probably going to continue to hold up. They've held up very, very well because, I mean, the Fed flooding the markets with all this free money, it doesn't just affect the stock market, it affects the real estate markets too.
It's really difficult for me to see residential there's variables, obviously, but it's hard for me to see residential getting destroyed in the face of the Fed going historical, mortgage rates here.
Yeah.
I mean, you can borrow 20% more money today than you could even 2 years ago and pay the same monthly bill. That's how people approach this, guys. They don't approach this by, oh my God, I'm borrowing $1 million for a home. They approach it, can I afford the $2,500 monthly payment?
Yeah.
right? That's how they approach it.
That's it right there.
It's like buying a car. The consumers, when they buy a car, they're not nearly as concerned with the overall price tag of the car and how much money they're going to pay on a 5 to a 7 year loan versus if they can afford the monthly payment, correct?
Mm-hmm.
So, with the Fed, maintaining historical dovish positions and the, mortgage rates under 3%, I don't see that changing anytime soon.
I don't either. I mean, Adam does make a good point here. I'm still waiting to see how many people that took the forbearance can make
Yeah,
those
I mean,
payments.
I was thinking the same
That's
thing.
a big one, Adam. That is a big one. And we're talking, what are we talking? September-ish?
Mm-hmm.
August, September, like September is kind of that thing. Adam, my personal take is I think they're going to extend that. I think there's about 30% of people, and these are based on the numbers I've been hearing from like real estate individuals. There's about 30% of mortgage owners that have done that forbearance. Could you imagine if they don't extend those forbearances, guys?
It would be a disaster. People
You're talking epic disaster there. I mean, epic disaster there. So, I mean, that's bad for consumers. That's bad for the banks. That's bad for the government. So, I mean, with the amount of people that are in those forbearance programs, I just don't, with the situation not really improving from a COVID situation over the course of the last few months since we did those forbearance plans from a national level, I think the banks have to do something or it's going to get really, really ugly. That's obviously something we need to track, though.
No, the forbearance thing is a big, huge thing, right? And, common sense would say, yeah, they're going to extend it, but hey, man, it takes one misstep. And Jamie Dimon, I thought, had a really good one. Jamie Dimon became I seriously, you should just go watch or read Jamie Dimon's comments after JP Morgan's earnings. Jamie Dimon's the CEO of JP Morgan. He says, in a normal recession, we see house prices come down. We haven't seen that yet. But then he basically said, it's only a matter of time. So, if that time is in September or December or something, at some point, these are not forgivable loans.
But he also said trying to predict the future is a waste of time because we don't know what the economic outlook's going to be. I mean, they're preparing for it, right? But he also basically said we have no idea.
Yeah, and so basically, when something's a yearly high or breaking out in an area where we don't know the future, like there's other areas that are more attractive for me.
Mm-hmm. Mm-hmm. I still like the home builders here. I think after post earnings, Matt, DHI either can be owned or whatever it might be. As a trader, as an investor, it's been a great stock for a long time. I would have no problem holding on to
Wall Street, because I mean, nobody is anybody here going to make the argument that the home builders are being driven by millennial Robinhood traders?
Nope.
Okay, so since nobody's going to make that argument, then doesn't it also make sense that Wall Street's not concerned about the forbearance situation coming up in August and September since they're driving price up?
Yeah. The market's ignoring
Wall Street's
it.
not concerned about anything.
That's true.
Well, I don't know if that's true. I mean, most people, most analysts, you actually think about Wall Street, they're actually bearish on the market.
Listen, shock. I don't like investing in something that is at a yearly high when there's questions, that will happen.
No, I'm not saying is it a buy for you. I'm just saying, does that alleviate some of your concern about the forbearance situation that Wall Street's really driving price up, in the face of that? And I guess my opinion is very just simple. I think they're going to do something.
Of course they are. Could you guys imagine a scenario where the banks start foreclosing on people in mass droves after this lockdown pandemic and all the government response?
It would seem illogical, right?
The government would step in and say, no, you're not doing that.
Just think about it, guys. These people that have taken the forbearance, you're talking about what, 6 months of non-payment with the balloon payment at the back end of that 6 months, right?
Yeah.
You think those consumers can come up with that balloon payment of 6 months?
No, they're going to renegotiate the loans.
You think the government's going to allow 30% of home builders to go underwater and foreclosed upon by the banks when the Fed's got the banks back?
No,
not going to happen. I agree with that.
Which means again, making it simple here, and certainly I could be wrong. I just think something's going to happen there.
Yeah, I do as well. Whether that's renegotiating loans, extending the forbearance, whatever it might be, they might package something together.
Well, I don't think it's going to be forgiven, not at all.
No, I don't think so.
Some type of extension, some type of repayment plans. Something's going to happen here.
Yeah, no, I'm with you 100%, which is why I still think home builders are an attractive area. Commercial real estate, like you asked about, I have no interest in that right now because I do think that the government would let leases from other big businesses like a retail shop or whatnot default and go bankrupt because you're talking about big boys dealing with each other, right? You're talking about companies, corporations, and real estate investors. With home builders and also the residential real estate, we're talking about the public. And I think you'll have a very different response to it. We also had crude oil inventory data we'll get to here in just a minute as well. Let's talk about it right now, actually. Obviously, crude is holding. I mean, just an impressive moving average run there. And now that the 200 is coming down, I'm interested to see what Mark thinks about that. Mark, what was the data on crude oil inventories? I saw a big build a little bit. They got it
Yeah,
wrong.
I mean, it was a big build. It was a big build, but like crude oil is simply resilient. It does not matter the news recently. It is, if this wasn't crude, if this was like a stock, it would make sense to me. It'd be like, oh yeah, Fed liquidity doesn't matter. Bad news doesn't matter at all. But man, crude is just acting like it's a tech stock in its resilience right now. And so it's just more, I mean, that's been the story for 3 weeks, right? Like no matter what reason you think it might go down, it is just resilient to the negative news.
How do you approach the 200 when it's falling in a chart like this, Marky? I mean, I know we're on the daily chart and there's some old historical levels as well. How do you read that? Because obviously
Well, I
anybody
mean,
looking at that visually, it's coming down and we're
yeah, I
going to
mean,
be testing
what
that.
you have developing here is a broad pinch where you have one area of resistance falling or maintaining and another area of support rising, and eventually those two things collide. And there's a compression, and then something has to give. So, I mean, this thing, I mean, it's a broad pinch. It's probably got, just from a visual estimate there, several weeks before they collide with one another, unless you have upward price movement. But it's just it's just a classic consolidation compression pattern developing there on crude.
Mm-hmm. And that is a nice little breakout pullback on the intraday, Matt. There's some readings on the longer term charts into the intraday charts that I find interesting. What are you seeing in crude's charts right now?
It was the breakout out of that 41 and a half level, after weeks and weeks and weeks of it kissing off the 20-day moving average was legit. You saw that breakout. You see the breakout accompanying that with increasing volume. It sets a higher high on the intraday, and then where does it retrace back down into? It retraces back down right into that, old breakout channel right there between 41 and 41 and a half. Find support in that range, and then upward movement in price with now a potential intraday breakout of 42. So what you're seeing it, you're seeing the same thing play out today that you've seen it play out, excuse me, that you've seen it play out in other moments of the time where you expected crude to sell off, right? Mark, with the buildup in inventories today we saw, what was your expectation on crude?
It should have got crushed. I mean,
got crushed.
Absolutely should have got crushed.
Should have got crushed.
Why crude oil is so resilient the last two months? I have no idea.
That's kind of my point here. I mean, it should have got crushed a little bit, but what happened? Literally, you're setting on those areas of support upward movements in price. So, the defensive nature of crude, honestly, it might be the most surprising things in the entire marketplace in the last 2 weeks.
Hey, maybe the Saudi princes learned the Fed's trick, and they're like, "Hey, listen, we'll buy those future contracts to prop up the market, right?"
Well, those Saudi princes were selling crude at negative prices at some point 2 months ago, but it's so resilient. It is, but for some reason, guys, it doesn't give me a lot of confidence in crude.
Mm-hmm.
Like I just don't have a ton of confidence in crude because, like, in the back of my mind, I keep thinking there's one of these days where all of a sudden we're all going to wake up and crude's down 10%. Like all of a sudden in one day it prices in everything that it should have done in the last 2 to 3 weeks.
I mean, you know where my head's at on that. I've been feeling that way for a long time. But then again, I mean, the resiliency, the longer it's resilient, at some point you're like, okay, now we're just going to have this compression test. And Matt, if you have a consolidation for 2 or 3 weeks and it breaks above the 200, forget about it. I mean, that's just flat out.
No, I get it. And I'm still bullish on crude. I'm just saying in the back of my mind, like every time I pull up crude every single day and the argument every single day is only defense. Like that's the entire argument on crude right now. And it's the argument I personally made in the last 3 weeks. It's impressive it's playing defense. It's impressive it's playing defense. It's impressive it's playing defense. But the longer it's doing it, it should give me confidence. Like that's what it should do. It should give me confidence. But for some reason, like today I woke up and I'm like, how is crude not down?
I know.
The real answer to all of this
7 days, though, for the 5th time in the last 7 days, I'm like, how is crude not down? And you're looking at this chart and you're like, oh, it's playing defense again. And it's like, well, when are you going to throw a touchdown pass?
Mm-hmm.
When are you going to throw the ball deep?
The real answer on why this isn't going down is I've been waiting for a deeper pullback to buy, and it's just spiting me.
It doesn't want to give it to you.
So.
Are you still playing USO, by the way?
The largest
I
commodity
haven't
in
for
the world.
3 weeks.
Just spiting Mark.
No, I haven't for 3 weeks because I've been waiting for a deeper pullback, but it's just resilient. I should have been cash flowing, but you always know what you should have done in hindsight.
I will say this. And I love that the cash flow thing has been a very, very appropriate approach to crude light, as it's kind of been holding and playing defense and all that kind of stuff. But Matt, I am starting to get more interested in those energy stocks like we talked about yesterday.
Okay, so why am I getting a little more cautious in the face of the price action that should say, you should be a little bit more bullish?
Because you're using logic. Just trust what you see. You're trying to think through this logically, like the market is pricing in appropriate risk, and it's not. I mean, asset prices are going up right now in the face of this Fed put. It's happening in homes, like the conversation we just had.
I know, but even at $43 on crude, that $43 on crude is not exactly robust bullish prices on crude oil historically.
No, that's still cheap crude.
It's not like you're paying premium for crude oil at $43 a barrel. It's not Tesla at $1,600. It's not Amazon at whatever price $14,000 million Amazon is, right? It's not Zoom. It's not Peloton. It's not any of those high flying tech stocks. It's $43 on crude. If you were to say $43 on crude a year ago, you'd be like, buy. That's a distressed area of the market at that point. Mm-hmm. So it's not exactly like crude is rip roaring in the last 6 weeks and it's overextended. This broke out of a pattern yesterday that we've been waiting for. And then today I'm just like, I just don't get it.
Yeah, I get the hesitation.
I'm hesitating on it.
Yeah. You got to trust the breakout, dude. I mean, until it hits that 200, you can trust the short-term pricing.
Well, honestly, I think some of it might be the 200-day moving average, to be honest with you.
Yeah.
I think, over the last 3 weeks, as we've been looking at crude, that 200-day moving average was just there at $45, and you were looking at that potential breakout of 41 and a half, and you're like, yeah, you got a lot of room to run up into that 45 handle. And now, looking at the chart, maybe it's a little compressed, and I'm just seeing it visually a little bit different here today, because that 200-day moving average is so tight up against that high from yesterday. Maybe, I don't know. I don't have the same belief in it on that breakout as I probably should. I just don't.
And I don't have any positions on crude. I'm not long or short, but I will tell you, like I just said, if that consolidates for a while, you get that traditional pinch at the 200, and then you break above it, I'll actually be more confident, Matt. I'm the opposite of Mark. Mark wants a deep pullback so he can get it at cheaper prices.
You want price appreciation.
I want clarity. Yeah, I want clarity. Yep.
I get it. I'm a little hesitant here on crude, but the defense. But don't take that as like the defensive nature of crude has been impressive. Like I'm not saying that's not impressive. I'm just saying personally, I'm seeing it visually a little different.
Mm-hmm. Well, and something that's been even more impressive have been the metals markets. By the way, you brought up silver and you looked at that chart. We got to look at SLV for a second. I think this is so interesting to me, just that is one of the top traded stocks. But the volume, Matt, I think today's volume is just incredibly off the charts on SLV and SI as well. Beautiful breakout. I know it's affecting gold as well. Let's give a rundown to the metals. And we actually had a couple of comments in here I think are interesting. Theta Turtle Trading, if we're not in gold yet, will there be a pullback? It's a great question, Theta Turtle Trading. And Swin even says, I'm targeting 2020 on gold by the end of 2020. I do like that target there, Swin. Matt, analysis on metals. What are you seeing here? Obviously, beautiful breakouts here.
It is. And here's the thing. Okay, let me just put it like this. You can't chase the dragon after 2 days of massive price appreciation. Yeah, unless you're momentum trading it, right? But you can't come in here and say, and I'm just talking as a trader looking at the screen here and say, you can't come in after silver has ran from the breakout from 20 to 23 and then just say it's going to continue to move like it did the previous 2 days. You got to be patient here.
Mhm.
And here's the problem with that. You're most likely going to miss out on further price appreciation, right? And, Pete Thomas, for those of you who listened to the Trading Justice podcast a couple weeks ago, Pete Thomas and I were texting last night, and Pete just says to me, he says, hey, if you know anybody that's looking to buy silver, you better let them know to buy the physical now because we're about to run out of stock, right? And he says, if we run out of stock, that means all the other brokers are running out of stock, which means silver. And he said this last night to me it was about 9 o'clock last night. And this was before the futures movement. This was before, really kind of that pop we saw in silver. And he says, I wouldn't be surprised if I see silver at $25 by the end of the week. And my response was, I wouldn't be shocked either. 22 was our target initially with the increasing volume. 25 was the secondary target. Silver's doing exactly what we expected it to do. And it's a freight train right now. There's no doubt about it. It's a freight train right now. You have a perfect scenario setting up on silver of limited supply. Miners are not mining right now and massive, massive demand. And so whereas, when you're talking about crude oil and you're like, well, you have limited supply and that's the only case for crude oil, that's fine. But then when you're looking at silver right now, you have limited supply and massive demand. And that's why you're seeing the momentum pop in silver, whereas you're not seeing it pop in other areas of the commodities market, such as crude oil. So in terms of this, my take on silver is the same take I've had for a very long time on silver since we had it in as a breakout candidate a month ago. Ride the momentum. The momentum's going to cease at some point. Ride the momentum. Okay. Mm-hmm. But initiating new transactions after this type of price movement, I just don't think you have the return to justify the risk. I mean, it's a different beast. When you have a trade on and you have profit in that trade, it's easy to say, let me risk some of my profit to see the additional return, right? But it's a different beast when you're looking at silver today at 23 and you're saying, okay, can I take the risk to 25? Can I take that? No, you don't have a 2-to-1 reward to risk ratio at that point, which means you got to be patient, wait for that next setup. And the coolest part about trading is, guys, is if you missed one trade, don't miss the next one, because there's going to be another really good setup on silver. And so I totally get it that, when we're looking at gold, when we're looking at silver specifically, and people that have not been in, they're like, wow, I want to get on this freight train. Don't chase the dragon. Be patient. There's going to be another setup. If this price movement we're seeing this week and this month in silver is legit, you think silver is going to stop?
And that's an excellent point. If this is legit, you don't have a 24-hour window to make a decision, right? Like I've had several questions come into the inbox, Matt. I mean, guess what? Guess what the number one subject of questions was?
Sure, silver or gold.
Silver and gold, right? Because a lot of tackle trading, a lot of members, and they come into two forms. One, what do I do with profits? And two, what do I do if I missed it? So
we're getting those same questions in the chat right now, Mark. A couple people saying, where's my target? What do I do with the profit? Where do I unload this? Other people probably don't have a profit target. So let's deal with those one at a time. I mean, Matt, what do you do with targeting here and profiting profits if you do have?
Well, I mean, the target for me was very specific. Once you broke out, once you broke out of 18, you were targeting, 19 by 20. Once you broke out of 20, you're targeting 22 by 25. And so once it broke up above 22 here at I personally, I wouldn't be, looking just to rush in and just lock in profit, because again, if this is legit, this is not the only price movement we're going to see on silver, right? And like I said, last week and this week, I'm seeing silver more as a position style than I am a swing trade. If this is a swing trade though, right, you're going pivot to pivot type momentum, you really got to focus on the candlestick analysis, right? You have increasing momentum happening. And when you see increasing momentum as a swing trade, you don't want to just lock in profit just simply because you log into your broker and you're like, wow, that is a home run. Let me pull the money. No, because what's the probability here? Always trade the probability. When you see big green candles, what's Marty doing? Marty's bouncing. He's having fun. He's got a lot of momentum behind him. You want to treat that a little bit differently than if you start to see a little bit of slowing momentum. So with the length of the candle, couple that with the increasing volume, the projection has to be higher prices from here. It does. And I know that goes into the face of saying you can't initiate a new trade, but that's a different discussion. Initiating a new trade is not just probability analysis. Initiating a new trade is reward to risk ratio. And right now, when you're looking at this as a swing trade, like I believe Dina got in at 18 and is looking at, at what point do I start locking in some profit here? Dina, I would suggest if you're concerned about that, I would suggest scaling out of that position. Right?
I was gonna say scale out, spread it out, take yourself to zero risk.
Profit, like lock in a certain amount of profit. And what that will do is it will remove the emotion from the trade. And so when we're looking at that from a monetary perspective, we're saying, okay, oh my goodness, I like when we make decisions based on money, and we all have fear and greed in our hearts, guys. Every one of us do. We all make emotional decisions, and we all make emotional decisions over money. I'm no different than anybody else there. So in terms of this, if you lock in some of the profit by scaling out of the position, you now are, number one, you're reducing your risk. Okay. And number two, if you lock in enough of that profit, you basically have a risk-free trade at that point to be able to let that momentum run a little bit higher. So if I was the individual looking at this saying, and if I felt a sense of emotion about, oh my goodness, I've made a lot of money here and I want to pull it from the table, I would suggest scaling out of the position, number one. And I would not criticize anybody for locking in some profit on silver. Nobody.
Like I did. I mean,
pop. It's been a good pop. Take the gift of the trading gods. There's nothing wrong with that.
Matt, will you go to an hourly chart, because the price action the last 24 hours has been much wilder than the smooth action leading up
It's
to
been volatile, Mark.
And so like when you come into today's, and when I say today, the last 24 hours of the future session, I mean, we see on Monday and Tuesday a very smooth technical trend, rising, come down to moving that 9, my girlfriend on there, bounce off, and then it's just been chaotic over the last 24 hours. So the smoothness of the uptrend is gone. We're now in this really choppy, volatile, oh my gosh, we're up 1,000,000% back and forth. And when that happens, I don't have any idea what silver will do tomorrow. I don't have any idea what it will do on Friday. I do know we're in a lot more volatile conditions. So you're going to get some, you could get up $2, you could go down $2 in a 24-hour session.
Yeah.
And so,
especially if you're watching your P&L column in that last 24 hours going up and down quite dramatically, right? So to answer the question, Tim, I would reduce exposure by scaling out of the position while simultaneously adjusting the stop loss underneath 22. And so if you're looking at that, buying at 18 or 19 or bought the breakout of 20, you got a very, very, very significant intraday support level right here at about 2180. And so if you scale out of the position, you lock in profit, you reduce the emotion, and now you can approach the market a little bit more clear-eyed, while adjusting that stop loss underneath 22 and still giving you some room to pop up into that 25 level. And if you do that and a week later, silver's at 25 and you're like, oh, I should have just, held my position. No, because you were emotional at the time, making emotional decisions. You probably wouldn't have held it to 25 in the first place. So there's nothing wrong with locking in profit, scaling out of the position while simultaneously adjusting the stop loss up as a swing trader, giving your instrument you're trading a little bit of room to breathe to make that next run up into 25.
No, I think that's really a common sense approach to it. There's no doubt about it. I would not fault anybody for knocking down some profit here and trailing a stop and all those kind of things. I mean, you got to have a trading plan. You got to keep the emotions out. I will say this though.
Can I tell you guys about a dream I had real quick?
A dream?
I had a dream last night.
Hold on,
Cody's like, I don't know if I need it. Like Cody's heard some of my dreams, but I did have a dream last night, and I woke up at 3 o'clock in the morning, and I actually checked the futures market on silver because my dream was silver was crushed. That was my dream.
Prophetic.
Well, then you got a good awakening then.
Listen,
when you're like, oh, it wasn't crushed.
I did. I had one of those moments where like, okay, we're still good. We're still good.
Listen, silver has hit any realistic short-term target 1 and target 2. This kind of move in silver is a once every multi-year move in a short period of time. When I'm talking compressed over a couple of days, it's just been an explosive move. There's nothing wrong with taking a little profit. I think Matt scaling in, taking a little bit of profit if you want some. I think that is spot on. These are good situations to have, right? Now, if you're not in silver, just listen.
Be patient. Be patient.
I know you want in, but if you will be in this scenario hundreds of times the rest of your
thousands.
life.
I mean, the whole market. Yeah.
So if you're wondering how to do this, I just posted a link in the chat. This was Tyler Craig's special webinar, The Art of Scaling Out. Yeah. Take a look at that link, guys. If you're unsure how to do this, The Art of Scaling Out, Tyler Craig taught this about a month or two ago as one of the special webinars. Absolutely go watch that.
I mean, it's a great situation for tackle trading. Members, a ton are in silver and gold. A ton.
And if you philosophy that I was talking about when it went to the new traders, you can't initiate a new trade, but if this price is legit, you're going to have another really good setup. You can say the exact same thing to people who are already in the position saying, you know what? You don't know what the future holds. You've had great price appreciation. Yes, my target too is 25 in the short term, but you've had great price appreciation in the short term, more than anybody could have expected with that breakout of 20. Yeah. Nobody could have expected 20 to 23 in 3 days. That's not what silver does. So you got what you wanted, lock in some profit, and wait for the next trade setup too.
Dude, it's flying. Even thinking of those numbers, 15% in 3 days here, guys. I mean, this is a blowout trend right now. That volume's incredible.
No, and seriously,
one thing that does frustrate me though, in watching traditional financial media, is they're saying silver's a run to safe haven assets. Like literally, did you see that nonsense?
Yes,
it was all over the financial media today.
Safe haven metals.
Investors are rushing into safe haven assets like silver. And I'm like, silver's not a safe haven asset.
Safe haven assets,
economic aggressive asset.
It's very aggressive. It's a risk on asset. It doesn't, safe haven assets don't move 7% a day when they break out. Okay. So no, they don't.
It's like, oh goodness, great.
Southern, like the utility company Southern, safe haven asset up 2%. That's a big move in a safe haven. This is much different.
By the way, big moves across many of the metals. Gold's up a little bit there, 1%. Silver, we've talked about quite a bit. Gold's still looking very good. I would have a completely different analysis on gold. I don't think that you should scale out gold here. I wouldn't fault somebody to take profit, but I personally see it as a different product.
Absolutely, I would. Gold is not just, you are not owning gold solely to make money. You're owning gold as that safety play, as that hedge, as the hedge against economic risk, as the hedge against market volatility, a hedge against inflation, a hedge against craziness out of the central bank. You don't lock in profit on gold. It's a completely different asset. It's a completely different assessment for me.
I agree personally. I'm seeing also bullishness across all of the different metals really, but those two are the ones running here today. Platinum's making a 4% move here today as well, trying to play some catch up, but the other two, they're the ones looking great. Palladium's had a nice little run there.
They're all doing, all the metals are running, but the ones that are technically clean are silver and gold.
I agree 100%. I'll tell you what else is technically clean, Matt. The more that it develops is the US dollar. It's now down 3 weeks in a row, 5 weeks in a row, if I'm counting the red candles here. And it broke below support here this week, and it's continued to move. Cody, you are the Forex kid.
Yep. We've been waiting for this for a long time, where I was I was getting a little bored with the dollar, and I was saying, unless the pattern changes, if we see a break, we got the break, and now things are moving. Everything that I've been pointing out as a bullish trade, which would have been short the US dollar against those, they're all moving. This is the same thing that is happening with the gold and silver market, the metals market. The currencies that are backed by these type of physical assets are moving as well, as the US dollar is losing its value. So the US dollar losing its value, we saw fantastic movements in the euro, the Aussie, the New Zealand dollar. We've been waiting for this, and this is where the patience comes in. You get a little bored for a few months, but then once it starts moving, you make sure you catch that train and you ride that train.
It's a breakdown.
Yeah, it is.
I was listening to a podcast yesterday, Matt. I definitely want you to listen to. Joe Rogan was interviewing Peter Schiff, and he was basically doing one of these.
I got a lot of respect for Peter Schiff.
Man, just highly intelligent capitalism, independent type guy, libertarian type guy as well, but definitely just pro capitalism. And he's talking about all of this response from the Fed, and basically he has a perspective that I agree with. I believe you guys would agree with that the dollar has extreme risk here, of melting down. From just all of this money creation, all of this monetary policy, all of the money that's just been flooded into the market. Matt, this breakdown to me is significant. What about you? I mean, I know it's just a technical breakdown. The dollar's been weird here the last little bit. What are you seeing here in the dollar?
Well, I mean, the dollar's been trending bearish now for a couple months now. The breakdown, I think with Cody, we've been kind of waiting for that breakdown. We've been waiting for the Aussie and the New Zealand dollar to break out. A little interesting movements in the Swiss franc as well. I just, when you were talking, Tim, I kept thinking about, I wonder what Jim Rickards is thinking about today.
Yeah.
Is he talking to his buddies saying it's beginning?
The death of money, the death of the dollar, currency wars, all of it.
Nobody's printed as much as we have. I know they've printed economic stimuluses here, there, or the other thing, but they're talking about more stimulus right now. I know that's an ongoing conversation. We're going to keep flooding the market with money. Every one of us, when we're talking about home builders earlier, we're like, oh yeah, they'll just bail out the banks, or they'll make sure that mortgages are whole, or whatever it is. We know they are pot committed to these types of philosophies, these dovish philosophies. I bet Jim Rickards is smoking a cigar if he does that kind of thing, and just kind of pondering about how it took so long for him for some of his ideas to start to come to fruition here, Matt. But I think
Tim, face printer towards window, place dollar bill on copy, hit infinite, and let it go.
Just let it go. Just let it go. I would love to hear what Jim Rickards have to say on this topic here today, Matt. There's no doubt about it. Marky, what's your read on this? I mean, more stimulus, more money, things are going to be flooding into the market. The dollar is definitely firmly bearish for me.
So my only thoughts on it is I'm going to go buy about 100 pounds of rice, and I'm going to buy some silver coins, and gonna get some ammo. And when we have the great reset that will eventually happen, because modern monetary theory does not work. I'll have some rice and beans for y'all to eat at my house with.
I don't have that same agree. I don't agree with that. I do not know that modern monetary theory doesn't work. We don't know that. I mean, here's the thing. We haven't seen the massive collapse yet. Do we have enough evidence to say it doesn't work?
Hey, Tim, we don't know socialism isn't going to work.
Guys, hold on. You guys, Tim, you keep calling it, and we as a society keep calling it modern monetary theory when there's nothing modern about printing money.
Mm-hmm.
There is nothing modern about what the central bank is doing.
The idea that you can dig yourself out of a hole, eventually something is going to break. Eventually, just like the bearish argument.
I believe
Same thing with modern monetary theory. Eventually, something will break.
I do agree
that until it doesn't.
Logic would suggest that, and I do agree that is likely. But I'm not. I can't say that we know that it doesn't work. That they can't.
Well, the consequences
I can say it doesn't work because there are a plethora of historical examples of modern monetary theory not working in the 15th, 16th, 17th, 18th, 19th, 20th, and 21st century with Japan. So once again, there is historical evidence here.
Two thoughts on the matter. Once again, if the nuclear bombs were coming, Tim would be like, they're very, very pretty, And my second thought, when Alyssa Milano is tweeting out modern monetary theorist, to support giving everyone universal basic income. Well, who's the boss? Not monetary theory. So.
Oh, I didn't see that.
There is, I mean, listen, Alyssa Milano, it's like her buying Bitcoin at the peak. It tells you all you need to know on why all of this shit does not work, and the consequences are disastrous.
So the universal basic income is the monetary theory, and and we should do it because we can just print our way to all money, and there's never going to be any consequences to how much money
the great
that we have.
economist Alyssa Milano is basically we should all be inside for a year until the virus goes away, and we can pay everybody infinite money because here was an article I Googled about monetary theory to justify my tweet. Who's the boss?
Listen, welcome to the $100 trillion United States bill. Okay.
It's just ridiculous. It's just ridiculous.
Well, I'm sick of listening to people who spout off on modern monetary theory, and simply because they put the word modern in it, think it's a new philosophy. It's not. It's not a new philosophy. It's been around since the dawn of mankind. Print your way out of debt. What do you think Brazil did in the 90s, guys? Come on. They printed their way to offset their debt, to hyperinflate their currency, to get out of their debt. That is not modern. What do you think the Weimar Republic was doing in 1919 through 1923 that preempted the death of the German mark? They were doing modern monetary theory. What do you think John Maynard Keynes was writing about in Principles of Economics when he wrote that book in the 1920s, talking about modern monetary theory? So can we stop the nonsense about calling this modern when there's nothing modern about what the central bank is doing? It's been done. It's been done hundreds of times in history. Do we really think Americans are that dumb that they don't understand history? Wait, I want to take back that. I want to take back that last one.
Yeah.
See, here's Mark in my head saying, Matt, you give consumers way too much credit.
Well, no, people don't really study those kind of things, Matt. There's no doubt about it. But obviously, the dollar weakness here is apparent, and I see a lot of downside. I can't remember, we were talking about that in our half-year review podcast. I mean, I think everybody kind of seen lower prices on the dollar and some weakness. Whether we get some big, massive collapse, if it does happen, Mark, I might just sit back with an iced tea and say, man, doesn't that look pretty as well? That's exactly right. But these are major support zones long-term on the index, on the currency. There's no question about that. Mark, you had some updates on stimulus discussions that you want to talk about. I think now would be the time to do it. What did you see? What's going on with stimulus negotiation right now?
Okay, now, and this is going to really hit the headlines in the next few days. They're debating how much money we print and give out between the sides. Right now, the GOP can't even get on the same side with one another. They're internally debating what they want and what their stance is within their own party, so that they then can debate with Democrats on what the bill, and they can't even get on the same page right now internally. Ted Cruz summed up the current stance of negotiations when he says, at lunch today, I asked my Republican colleagues, what in the hell are we doing? We'll see where this ends up. We still don't know the details in the initial proposal, but as it's written right now, I'm not only a no, I'm a hell no. So, Ted Cruz obviously summing up.
I love me some Ted Cruz. He always comes in with the most common sense comment where it's like, guys.
I did not like Ted Cruz 4 or 5 years ago. I don't mind him today. I like that.
The beard.
Did you see Ted Cruz and Mark Cuban are in some kind of Twitter beef?
Oh, dude,
it's beautiful.
I want to Mark Cuban.
Some of that.
You got to go look this one up, Matty. After you will enjoy it. There's no doubt about it.
I feel like Mark Cuban. I like Mark Cuban, but I feel like he's always looking for someone to.
He's always beefing.
Yeah, he's always beefing with someone. He's looking for something. He's like, all right, I'm done with you. All right, what's this guy say over here? Oh, yeah, really?
He's one of the guys that doesn't have the ability not to beef with somebody.
Yeah.
The last one was, have some balls for once, Ted Cruz. Speak to me. It's my tweet from Mark Cuban. So he's not shy.
Like I said, he's always beefing.
Yeah, you got to go look that one up, Matty. I think you'll enjoy it.
So I still think that there is a potential for a day sometime in the next 8 sessions where you have that 1-2% down day in the market because huge impasse, nothing dramatic, but a nice 1-2% shave, on some kind of headlines if the sides can't get together. And they haven't even started debating with the Democrats.
Here's a
yet,
simple
honestly.
question I have with all of it. Is there a strategic reason the Republicans don't want to get a deal done before the 1st? Is there something?
Yes, there's a deadline on July 31st.
Right.
Yes,
So does that
very, very important in these negotiations on the extension of the $600 in unemployment benefits, where people are now making more money than when they even worked full time at the job. So yes, the Republicans are taking a very hard stance against that against the unemployment benefits, and I, for one, completely support it.
Right now, they're at the stance of no deal is almost better than a bad deal. But as we get closer to that deadline, the likelihood of a bad deal going through increases.
Well, McConnell came out yesterday.
The incentive for somebody to go get a job. You cannot remove that incentive.
McConnell came out yesterday and said it's really unlikely we get a deal done by July 31st. So, now, is that strategic or is that just reading the room? I don't know.
Listen,
who's the whip right now?
Together and got $1 trillion deal done in literally 3 days. I promise you, the Republicans know exactly where their lines in the sand are drawn. The Democrats know where their lines in the sand are drawn. They've had internal debates and discussions. The 31st deadline that you're hearing from almost every Republican, Ted Cruz, the House leader, I forget his name off the top of my head. I'm sorry for that. You've heard it from Mitch McConnell as well. They're delaying past the July 31st deadline, guys. Yeah. They want to negotiate when these things are basically where they can say, okay, your base doesn't have that $600 every single week. Are you willing to take $200? Mm-hmm. That's what they're waiting for. They're waiting for a little bit of heat on the fire, guys.
And by the way, I'm with you 100%. And I think I would love to hear if somebody has any argument against that. But the reality is we should not extend the $600 a week unemployment benefits to incentivize people to stay home. We need people to get back to work in some form or fashion. Should there be something, you bet. But I think that's anti-capitalism. And I do not think it's a good message for the American people moving forward. Now, where that middle ground comes in, maybe it's a couple $100 they throw in there if you're in a distressed industry or something like that. But I do believe they will get some kind of deal done here, guys. At least within the next couple of weeks. Whether they hit that first deadline or not, I don't know if it really matters, quite frankly. Maybe the market has a one-day response to it, Mark, but they're going to get a deal done. Don't you guys think?
Yeah, and the market believes they're going to get a deal done. Everybody here believes they're going to get a deal done. No, it's not going to happen for the July 31st. The market's like, okay, it'll be first week of August.
Yep. All right, let's talk stocks here. We've got a bunch of companies that we got to run through. There's some upgrade, downgrades, but mostly earnings here today, Maddie, and we're going to get through them one at a time. I know you got a big list. I want you to start working through them in whatever order you have them written down in. By the way, if you're out there watching our show right now, great time for me to remind everybody, give us a thumbs up. Click the subscribe button, come back and join us every day. Click the bell and help us get the word out there and tackle trading. And one thing I like to do every couple of weeks is where you at out there, guys? I like knowing this. I like knowing where Team Tackle is in the chat. Just type in where you're watching the show, city, state, country, whatever you want to pop in there. We've got a global national audience as well. And very proud of our Team Tackle. Maddie, go ahead.
Yeah, let's start with the two brokerage houses that reported here today. I want to get Mark's take on this as well. Mark, I know you trade at Interactive Brokers. How long have you been trading in Interactive Brokers?
Listen, somebody told me that they had dollar commissions like 10, 12, 13 years ago. And I was like, oh yeah, that's my broker. So now, obviously that's not as big a deal these days, right? With a change in commissions and whatsoever. But you get used to something, you stick with it. So yeah, I'll probably be
867,000 people just like you who found Interactive Brokers this past quarter, which was 111% increase over last year's numbers, same quarter.
Listen, I love Interactive Brokers.
Well,
it doesn't have the best charting software. But I never have any issue getting filled. I have never.
Their speed of execution, Mark, is probably one of the best in the market.
Listen, I just love Interactive Brokers
because Well,
So-
and very quickly, when you're looking at commissions historically, people would always make a decision like you did. Oh, I get $1 commission. I get $1 commission. Oh, then let's go there, right? But speed of execution, fill rates are so important in that analysis as well. Interactive Broker is one of the best ones out there.
No,
And
I remember shorting Interactive Brokers once, and I felt so dirty shorting Interactive Brokers on the Interactive Broker platform. I was like, oh, this is dirty.
Said no TD Ameritrade user ever. Whenever.
No TD Ameritrade ever. Like TD, like Tosh users, they love shorting TD.
That's right.
Because there's nobody that was that old Toss who actually likes TD Ameritrade. Tim, would you agree with that? Anybody that merged within TD Ameritrade from the old Toss, they hate TD Ameritrade.
Well, because we remember old Toss. I mean, a lot of the functionality, which by the way is still some of the best in the market, this is the stuff they've had for 10 years, guys. I mean, I know they fixed a little bit of the codes and this and that, but when Toss hit the marketplace back in the day, Maddie, it was revolutionary.
Tim, it's not that for me. It's their trade desk.
Well,
their trade desk. The first one trade desk back in the day was the best in the world. Amazing. You were always talking to traders who understood traders talk. Now it's all customer service and routing, and it's just a nightmare. TD Ameritrade's a nightmare. But speaking of interactive brokers here, Chucky, 57 cents on EPS numbers versus the expectation of 30 cents. Revenue topped at 587 million versus 463 million. 0.2% year over year increase in over revenue. The impressive number here, though, was the 111% increase in active funded. These are funded accounts. Mm-hmm. These are not accounts that just, get an idea. They wired money to the broker to start trading. And it's nothing we haven't seen in other brokerage firms out there with increasing activity in trading in this environment. So that was fairly impressive. Do you guys see anything on the chart here that I'm not really seeing anything? Maybe a potential breakout, but I don't see anything on the chart there.
And if you love the stock, maybe, but I not for me.
The only thing I see is if whatever you had a broad market sell off and came down, there's a lot of support levels down there in that 35 to 40 range. I mean, that's the only thing I see on the chart.
That reminds me so much of everybody who's ever analyzed AT&T. Like, literally ever. Like
if it comes down, then I'll buy it. Yeah,
always that on AT&T. Yep. The other broker, speaking of Toss, Tim, the other broker, TD Ameritrade, purchased by Schwab last year. TD Ameritrade reports earnings of $1 and I want to say 9 cents a share versus the expectation of 84. 1.6 billion on revenue versus 1.2 billion on the forecast. 6.4% increase in year over year. Here's the kickers here, guys. A record number of 3.4 million traders under TD Ameritrade. They added 661,000 new funded accounts. That's up from the 608,000 new accounts they had in the first quarter. That represents about a 62% increase in active funded accounts here. TD Ameritrade, to me, nothing really to see here on the chart. I could see maybe a breakout on interactive brokers, but really kind of a lukewarm report here on TD Ameritrade. So those were your broker roundups. A couple other earnings very quickly. Snapchat, Tim, you made a comment in pre-production here earlier today. You said, I had no clue that many people use Snapchat.
I had no idea. That many people are using this product, Matt. I knew it was popular with certain kids and whatnot. But what were the numbers? I think like 280 million users or something like that. It's crazy. What were the earnings on this stock?
Earnings numbers came in very, very lukewarm. For me, and let me save that for a second. Snapchat came in at expectation. They lost 9 cents a share. That was the expectation. They came in at $454 million in revenue versus the expectation of $418 million. That represented a 17% increase in revenue year over year. Why is Snapchat down? Because you got to do a hell of a lot better than 17% increase in year over year revenues to really see that, to continue to see that price appreciation on Snapchat. So a little bit of a sell-off here on Snapchat, a lot of it due to, if you're in a growth company and you need it to grow, and 17%, is just not very good for me.
Mm-hmm.
No, and futures, I mean, the overnight action on Snap started to fall when the chief financial officer said some things, and it basically was like the bank's earnings. It's like, listen, things are all right, but man, things could still deteriorate. Talking about advertising demand, basically saying there's a lot of ways things could get a lot uglier down the road, but we don't know. That's been the theme. One of the sub themes developing in earnings this year so far is things aren't terrible right now, but we don't know how, and there's a lot of ways that they could go bad moving forward. So
I get that, and I get the market response. I mean, but guys, their global audience is growing. I mean, they added 9 million daily active users, and internationally, their growth was even better, I believe. So there are still some. I mean, that was the takeaway for me, Matt, is just the amount of users, and I had no idea that they were that big internationally as well. I don't know where I've been. Maybe my head's in the sand. I'm not a Snapchat user, but man, Cody, you were saying you and your buddies use this, don't you? This product?
I'm not typically on it, but a lot of my friends are. I mean, I'm the old man. I don't have an Instagram or Snapchat. Like, they're on my phone. I don't use them.
Yeah. It is an.
I'm more likely to pick up the phone and call someone than even have a text conversation, because
and when Cody's talking about picking up the phone, he's like literally picking up the phone. He has a rotary phone. That's how old Cody is.
Thanks, but no.
So you got interest in Snap, Tim?
Not in the short term. A breakout up on the highs, though, I think you could play it. You know, you got a gap down on earnings. It kind of throws the chart off a little bit here, Matt, because now all the pivot relationships are back and forth. No, not as a swing trade, Mark.
It's going to be hard for companies like Snapchat, Twitter, Facebook, Netflix to maintain their subscriber growth that they came out of the first quarter with.
Yeah.
It's going to be hard to maintain that.
Yep.
And that's what we saw with Netflix a little bit. That's what we saw with Snapchat as well a little bit. Company that's very important to the market, Texas Instruments here, Tim. I want to get your take on it. They came in at a fairly robust report in terms of EPS and revenue. Came in at $1.48 on EPS versus the expectation of 88 cents. 3.2 billion versus 2.9 billion in expectation. They did see revenue decline 11.7% year over year. However, they also did an actual legitimate increase in guidance, not a 1 penny on a $6 guidance. They did a legitimate, about a 20% increase on their EPS numbers from a guidance perspective. Mm-hmm. They were expected about 91 cents a share next quarter. They came in and they increased that to $1.14 versus $1.34. I actually took the raw numbers as very positive for Texas Instruments. Market didn't like it, sold off a little bit, 3%. Maybe just threatening that breakout of a resistance, but I actually took the numbers as overall positive here.
I think it's a great stock, and I do think the numbers were just fine. I mean, a 3% move on Texas Instruments is within the market maker expectations. Yeah. So, when you're looking at earnings responses, you have to think about, okay, how far did it move, but how far did the market think it could move? 3% is not a big deal. Obviously, it's not a positive for the stock for the day, but man, that stock's got a beautiful long-term trend. It's a wonderful dividend-paying company, conservative company. And Matt, I think if you're looking to target something conservative, pays a dividend that could be breaking into the all-time highs, you could do worse than TXN.
On the daily chart, I mean, the daily chart on Texas Instruments here is really choppy, no doubt. But if you look at that weekly chart here, what you'll see is you'll start to see a forming resistance right there at about 135. Obviously, this week we tested above that level before we came down, but I'm still looking at that 135 level as a potential breakout. And then when you look at this from a technical perspective, you have a lot of price appreciation coming into that resistance breakout, consolidates, comes back down, forms that weekly bullish retracement, trying to run up again. Give you another week, maybe 2 weeks of consolidation here. That breakout of 135, if you close above that, that could be something fairly legit. I would keep an eye on Texas Instrument here. And I would honestly, I would look at the sell-off here as an opportunity to say, okay, let's see if we can close above that 135 on the weekly chart. And if we close above that 135 on the weekly chart, because a lot of Texas breaking out of 135 on Monday was market related, right? I mean, that was the big up day in the market. Obviously, Texas sells off on the earnings report. I took the report as good. Let's see if it can consolidate between that 130, 135 level, form a little bit of breakout of that 135 level. That's something to keep an eye on.
I'm going to throw this question to Mark here, Linda in the chat. And by the way, Linda, I really like this one. Marky, Texas Instruments or Coca-Cola for a dividend play? You got to pick one.
Texas Instruments.
Yeah, me too. Maddie?
What's the current yield on Texas?
Current yield on Texas is 2.6, Mark.
Yeah. I mean, listen, all of you guys, I don't have anything to add to your analysis. I think is correct. There is nothing in that report that if there is not a technical breakout signal, you should trade it, you should play it, because the report was just fine.
There was nothing wrong with the report. Right? Like, honestly, I think the sell-off could represent an opportunity for that breakout of 135. And looking at it, I mean, you could look at Coca-Cola right now, and it's based in between 43 and 49, $50. You could look at Coca-Cola right now and say, okay, it's basing, let me invest in it, capture the dividend, even if it goes neutral, write covered calls, write that 50 call option, Linda. And if it ever breaks up above 50, then you pull it off and you go streaking, because you would also, probably break up above that 50, the 200-day SMA there as well. So I think there's an argument for Coca-Cola here, guys, over Texas. I don't think it's as easy as just saying Texas because of the strength. I mean, you got a very good neutral channel over the last 3-4 months in Coca-Cola. Support is very, very clean right there at 43. Resistance clean right there at 50. You're currently at 48. You could buy Coca-Cola, capture the dividend, as long as it stays neutral. You ride against the covered calls. You go streaking above $50. I could certainly see that. Now, with that being said, I do lean Texas. I do lean Texas. But I would also like to see that Texas break above 135 first.
Mm-hmm. Mm-hmm. Coca-Cola going streaking, though, that it'd have to break. You have to break
go
that.
streaking to 51.
Okay, I get it. Okay, everybody's like, now you gotta repeat what Silver did on going streaking. Are you telling me that's not a good little potential pop from 50 to 52 and a half?
Dude, Coca-Cola couldn't go streaking without a walker.
That greedy in the world today that an 8% movement in growth is like, oh, that's nothing. It's Coca-Cola. That's awesome.
Cue the Mark Millennial voice here. Actually, don't. Let's keep rounding up earnings if we can.
We need to bury that 19 feet under.
No, Marquis Pro in the chat was talking about it earlier. People like it, Matt. It is what it is.
I mean, come on. I mean, what you got against it? Like, I get on the Snap to keep it real. Like when I do online dating, like, you get on Snap to keep it real. Yeah, that's what you do. Coca-Cola, that's your grandpa's.
What my son would tell you, Mark, is you're acting like a boomer.
Listen.
That's a boomer impersonating a millennial. That's what that is.
We got a lot of stocks to round up. Keep working through them if you can.
Made him speechless. He doesn't know what to say.
Oh, no. Listen, I can go on forever because, it is my right and it's in my safe space to say whatever I want on the Zoom, right? While I keep it real on the Snap.
All I know is my son called me boomer last night for
don't project your boomerness on me. Listen,
I'm just putting it on you. I'm going to tell Tanya.
I don't even know what generation. I because I'm not a boomer, but I'm not I don't even know what generation.
You're a millennial. That's what you are,
dude. You're Gen X, aren't you?
I have no idea.
Yeah,
Mark, you're Generation X. That's how you do. How do you not know what generation you are?
I have
you're not even on the cut. Like Tim's on the cut. Like,
dude, you're Gen X.
Millennial, or can you be a Gen X? Like, yeah. I'm a young Gen X. You're right in the middle of Gen X there. But moving on, HCA here, Tim. I don't know if you guys looked at HCA's earnings. Did you guys see HCA's earnings today?
I did not.
Yeah.
Healthcare. I just hate healthcare.
Okay, I want to see if you still hate it. HCA came in at $3.23 a share versus the expectation of them losing 44 cents a share.
That is interesting.
Tell me the last time you saw a beat like that on EPS numbers.
See, that's a legitimate beat. That's not one of these analysts cheat and set this really low bar so every company always beats. That's a legitimate beat.
They also beat on revenue at 11.1% versus the expectation of 10.3 billion, not billion. So they did about a 9% beat on revenue, destroyed EPS numbers. Revenue was down overall 12% year over year. Market seems to love it. It's kissing off the 200-day moving average. Obviously, I don't want to chase it. Or the overnight action pushed it up. At the cash open, pushed it up as well. That usually is a very positive sign for continued appreciation here. So keep an eye.
That would be a nice setup. If that consolidates for a little bit, rising moving averages.
Break above the 200.
That could be a really nice trade.
I just think we should keep an eye on it, right?
No, absolutely,
the earnings
100%.
numbers were legit, in my opinion. They were legit, in my opinion. So let's just keep an eye on that. And then the last one really I have in earnings roundup, Tim, is Biogen. And Biogen comes in another beat here for Biogen, $10.26 on EPS versus the expectation of $8.03. Revenue beat as well, top and bottom line, 3.7 billion versus 3.5 billion. Revenue increased 1.8% year over year, and yet another increase in guidance. So markets muted on Biogen. Biogen's such a hard read, though. And this is such a difficult stock to get a read on.
I stopped trading it completely. I'll just be very direct with that. And I like this company. It's a wonderful company. Inside this space, the stuff they work on, I support. I mean, they work on treatments for Alzheimer's and breast cancer. And
It's
doing
good. I have nothing wrong with the company.
They're a wonderful company.
Wrong with the company. It's
and
just, it's really tough in this environment to trade Biogen.
I don't think you can trade it. I think you could invest in Biogen. I really do. I think if you believed in it, the premise for like 5-10 years kind of thing, that's a different animal. But you look at the gaps, Matt. I mean, anybody who's been on the halftime show, we brought Biogen up on any given random day a couple of times in the last few years because they had some treatment that got passed or this or that, and it will gap way up or way down. It's just extreme volatility risk in the short term.
Very, very much so. No doubt about that, Tim. But I mean, the reality is, guys, we had quite a bit of earnings here today.
I got two more for you on earnings today.
Well, the last one I was going to do, I'm sure you were going to do the same one, United.
Yeah.
I just saved United. That's all I did. I saved United because it was that bad. Like, as bad as you could get, it was that bad, United Airlines. Now, it's only down 3% on the day because a lot of how bad it was expected to be that bad. But United Airlines, my goodness, they lost $9.31 a share, guys. $9. When Mark called me up last night, he goes, Matt, they lost $9.30 a share. I was like, what? How? Wow.
How many $billion is that? Couple
more
billion?
than we can count right now, right? But $9.31 a share they lost. They did top revenues expectations at $1.5 billion versus expectation of $1.1 billion. But here's the number, guys. Revenue declined 87.1% year over year.
Wow.
They lost more money than they made in revenue. Like,
wow.
You do not get a worse report than what United just reported.
Man, if you're going to take a gamble on airlines, I don't know how you don't do it at really discounted levels. I mean,
if you're buying the United Airlines in the face of what they just reported at $30, you're asking for Mike Tyson to punch you in the face and bite your ear.
Like, listen, I know we have a manipulated market and liquidity, blah, blah, blah. But it is a long time before United gets back to any.
The only argument on United is the government bails them out argument.
Yeah.
I mean, that's
the only argument.
Yeah. Well, and I mean, that is a legitimate argument. I think the assumption.
No, it's a legitimate argument.
Right.
It's a legitimate argument. I'm not throwing cold water on the argument. But when that's the only argument, because one of the reasons why we have a tendency to like Boeing a little bit, even though we haven't done it yet, it's been a company we've liked in our history, is because the government will never let them go under. But there's other areas of the company that is doing good. United, 87% drop in price, 87% drop in revenue. That is a devastating. That is as bad a report. Why is their entire board of directors not fired today? Why is their entire management team not literally pink slipped, walking out of the door with a box full of whatever they have in that box?
Are you kidding me?
That's getting people fired report. I'm sorry. And yeah, I get it that people are like, well, we're going through a pandemic. Fine. I don't care. Figure it out. You just lost 87% revenue. We're going to have to gut our company, failed leadership. Get them out of here.
Dude, they're more likely to get bonuses. What are you talking about?
You beat me to the joke. This is 2020. When you go bankrupt, you get a bonus if you're an exec because we got to retain talent. So,
and they're successfully negotiating the furloughs of their pilots and this and that. Now, I guarantee they'd come up with some narrative to make an excuse, Matt. I get it. I'm with you, though. It's obviously this company. It does bring up the Boeing.
What the analysis is. When you lose close to 90% of your revenue, you're fired. I don't care what the variable is. Could care less. Now, you guys are probably right. The bonus checks are coming, right?
Right.
You're probably right. But I'm just saying that those are numbers that get people fired.
Mm-hmm. Mm-hmm. Love it. Earnings roundups, by the way.
Or those are numbers that get the leadership to cook the books next quarter to get their bonus. One or the other.
That's going to be coming as well. They'll be doing some creative accounting at some point. And then they're going to, you watch this, Matt, UAL is going to have some earnings increase next quarter where they beat depressed expectations, and it'll be quarter over quarter, the biggest quarter they ever had.
You're not dead. So if you're living, that's bullish. Like that's the analysis. Oh, good. You didn't die. Bullish. Buy. Come on now.
Yep. Hey, listen. Okay. Well, it's not today. Tesla earnings after the bell. What do y'all think?
Well, and that's what I was going to say, Mark, is today we had a lot in the earnings roundup, but there is nothing like the two stocks we got reporting tonight, guys.
That's right.
Tesla, Microsoft.
Microsoft's earnings is going to be fabulous. I think we'd all probably agree with that, or at least really decent. What about Tesla, man? Are they going to cook the books?
I would be surprised if Microsoft doesn't come out with a pretty decent report. I would be surprised. Tesla, this earnings season for Tesla is so important, though, guys. This might be the most important earnings report in Tesla's history as a company. Okay. If they show a profit this quarter, they're most likely going to be included into the S&P 500. And if they're included into the S&P 500, one of the reasons why Tesla is skyrocketing this quarter is because of if they show a profit, they're included in the S&P 500. And if they're included in the S&P 500, what does that also mean, guys? They're included in market index funds. Yep. They're included in ETFs. They're included in mutual funds that track the market index. That's a really big deal for a company. And so this is a really, really important moment in Elon's company, Tesla, because of what it could mean for the future of Tesla. Now, if they come out and don't beat and it doesn't, that's fine. It doesn't mean Tesla's just done. Tesla hasn't been a part of the S&P 500 in the past, but a lot of this run up is about that. Tesla's got to come out with profit here today, guys.
Well, and they will. And they will, Matt, because they have the most creative set of accountants of any publicly traded company everywhere. They'll find the rebates and revenue recognition, and they'll misclassify something as goodwill. And
all I'm saying is I like Tesla, but you better be buying put options on your equity positions to control this.
Oh, you don't hold stock through this. That's crazy.
That's all I'm saying.
Come on. I mean, you had an 80% or 80% run like the last 2 months. I mean, the stock's like up over 100 and something percent year to date or whatever it is. I mean, it's been one of the most biggest bullish performers in the market. If you hold long equity into the earnings on this one, I wouldn't really understand that. I don't even know if buying a put option, you can always get back in, right? I mean, can't you just get out and get back in if you love Tesla?
Not if you have tax penalties. I mean, there are tax consequences for that type of price appreciation, though. Yeah, if you're talking about it from a long-term perspective, Tim, if people have been holding Tesla for years, they're not going to get out in front of an earnings. Are you kidding me? Could you imagine that tax liability?
Yeah, listen, you guys don't get it. Everyone's driving a Tesla one day, and they got the best accountants in the world. They will make that look good. All I know is my favorite moment of earnings season is always listening to the call, reading the transcript. I get a Philly steak sandwich on Tesla's earnings because I always love it when the people basically accuse Tesla of accounting fraud.
Dude,
some of the people there. And Tesla's answer.
You want
know?
to, it is amazing because when it gets really interesting is when the analysts who cover Tesla, like they're like beat reporters in like the NFL, Matt. They cover the same team all the time, right? So the people who know Tesla stock and analyze it, Elon knows them and he doesn't like many of them. So when they start probing him, he doesn't like.
You don't like any of them.
So when they start probing him, he has had some terrific one-liners.
It goes without saying, if you have rode this train from 1,000 to 1,500, you lock in profit and you wait till after earnings. That does not even need to be said. That is so obvious, Tim. Okay.
Hey, Tim knows I sold a naked put on Tesla, full disclosure, this morning. So, he was there with me when I did. So,
I hope you close it before 2 o'clock our time.
He did it at like 400 strikes. So.
You're stopping put options like you're willing to take possession.
Listen, I'm not even willing to take ownership of 400. If that thing starts going down big, I'm rolling that shit out to a future month lower,
Mark's on a naked put, like that indicates Mark's willing to take possession. When I know damn well you were just trying to take advantage of volatility.
Listen, this is the freak of Tesla. Do you realize that if I sold a January naked put on Tesla, clear down at the this is how little faith. I can get $100 right now for a 95 naked put on Tesla expiring in January.
Well, good luck holding that margin if Tesla goes to 1,000.
So
point is though, if you've been in Tesla short term and you're not worried about taxes, obviously you're locking profit, Tim. But if you're a long-term holder in Tesla, you got taxes you got to take into account there, and buying a put options is a much better way than dealing with that.
Hedging is a great way to do it. There's no question about it. I think Tesla's going to be the more exciting.
I think we all agree though that you cannot just hold this through earnings and just hope that this continues to go up. You are literally gambling everything you made.
You look at the high flyer from a serious analytical point. You look at the high flyers, things that have been really appreciated. They haven't fared too well. Netflix, Snap, 2 examples. They've been punished a little bit if they've been at these really elevated levels historical to where they've been recently. They've been punished a little bit on earnings this season. And
we're getting more normal earnings reactions, Mark. There's no question about it. We're getting
the ones down below
reactions where things can go up and down. Yeah.
Yeah. Even Texas Instruments, who had a good report, right? Punished a little bit, not as much as Netflix.
Okay, but why somebody I'm trying to understand why anybody would just hold through this. This is how important of a moment this is.
Oh, dude, you need to read the fanboy.
No. I'm talking as people who are actually not fanboys, right? Why would anybody hold naked through this? That's how important this is.
I guarantee there are kids today buying out of the money 2,000 strike call options.
They're risking everything. They don't care.
They
don't care. They're risking everything. I'm not talking about to those people. I'm talking about traders or investors.
All right. So I'll give.
No. Let me finish.
Here's one.
Who really do understand the importance of Tesla being included into the S&P 500. And if that doesn't happen, a lot of this run up doesn't exist. So if Tesla's right and Elon does get included and Tesla gaps up, you buy a put option, you're basically just removing the risk out of the equation. And if they do get put into the S&P, again, don't you think the run in Tesla is going to continue?
Yeah, it would.
So you take the risk out of the equation tonight. And if you're right on I love Elon and I love Tesla, all you did was remove the risk out of a very important moment in time.
If you knew what you were doing and you wanted to not buy a put, but just take the volatility out, you could collar this, right? So no matter what it does,
write a call, buy a put.
Write a call, buy a put to take the volatility. But man, this option chain today on Tesla has been crazy. There have been nearly 10,000 options bought and sold at the 2,000 strike expiring this week. Another 70,700 expiring at the 2,500 level. So there is a lot of activity on that option chain.
The market is pricing in a 200-point movement up or down.
Give me the over right now. I'm going to
give me the over.
All right, so let's say Tesla has that sell-off that we saw on Netflix, right? That 10% move down, maybe come down to the 20-day moving average and then hold. I mean, what's the trade setup for a bull looking to get in that you would demand as a trader?
$1,000.
So a pullback clear to the breakout level.
Yeah.
If you're going to do the pullback, you probably need a deep pullback, and it's going to take probably a month to develop, even if you get that pullback, Mark. The faster trade setup,
bro.
Well, it could be. That's why I say give me the over. I actually think you could probably get another trade set up on a breakout as well up there on those highs.
I don't know. There's a lot of scenarios on Tesla. And there's going to be opportunities here come post earnings. There is.
Yeah.
So obviously we need to wait to see it, but
we'll break this one down tomorrow. Yeah.
What are the odds we lead with Tesla tomorrow?
It's not 100 because Microsoft.
Yeah, you got Microsoft as well. I'd say 60-40, Mark. Most likely we will.
Are you kidding me? No way. There are so many different variables that go into that. What Tim says in the intro might change what we first talk about.
That's true. That's true. I do control a lot of this. Yeah.
But it most likely 50-50 Microsoft or Tesla tomorrow, but obviously both are very, very important for the market.
Yep. And
they're by far the two biggest names this week, by far.
Couple of quick ones, Matt. Just going to give you the headlines and we'll go through them real quick. About 4 or 5 headlines. Best Buy actually came out and told us that their sales year over year had increased 2.5%. Just kind of came out and gave us some numbers. Internationally, their sales were up big. But here's another one here, Matt. And this is why companies like Best Buy have done such a great job. If you go onto Google and you start looking for electronics that you want to purchase, very likely it'll be a Best Buy ad that'll pop up there first. Their online sales were up 255%. On the quarter, which was obviously huge, breaking out of the all-time highs there. Matt, interested in Best Buy here?
No, not a kiss off $100 overextended. No, but I am interested. I'm putting it on a watch list. I'm waiting for that next breakout. Give me a high base breakout of $100 on Best Buy. 100% I'm on board. But no, I'm not on board chasing it. I do think the news that came out today on Best Buy was very encouraging, though.
Very bullish. Yeah, very bullish.
Very encouraging. Their online sales in the quarter. Now, this is not a quarterly report. They were just updating sales, but Best Buy said they increased 3 times in the quarter. 3 times. Their online sales increased 3-fold in the quarter, guys.
That's amazing.
It's amazing.
Yeah, it's really, really good. So what you want to see from a company like this. Apple Computer.
I think as a company, people should get on the watch list to look for either a gap fill to 90 on Best Buy or a high base scenario between $95 and $100 on Best Buy.
Yeah, both would be tradable for sure.
Would be tradable.
Yep. Apple Computer, you're going to see more stories about this over the coming weeks, months, and years. This will be a theme for the decade, Matt. Apple Computer is committed to go to 100% carbon neutral by 2030, improving their ESG kind of analysis and score. Companies are going to continue to do this. A lot of tech stocks have already said that.
It is going to be the number one thing we see in this decade as corporations move into the ESG environment. As Wall Street has indicated, they will treat the ESG environment as a growth area of the market. They're going to start putting money into that area of the market. And I mean, you've seen it with a handful of big names over the course of the last quarter. You're going to see it more and more and more. Corporations, I mean, the thing is, it's like I was telling my daughter the other day, who, has grown up hating corporations, social liberal, hating corporations. I'm like, have you seen the good things corporations are doing? Right? You sit there and rip on corporations and you rip on government for this and this and this, but then you see companies like Google and Amazon and Apple and you see, companies like BlackRock, embrace this with Larry Fink about the environmental movement, right? The ESG movement. And so I think corporate responsibility is a very, very big thing. For me, it is anyways. It's a corporate responsibility. And I personally like to see Amazon and Google and Apple and, BlackRock and the rest of these companies, further this movement.
And I want to remind all the kids out there, listen, capitalism is the answer, not the problem, quite frankly. A lot of these responses corporations are doing it. Absolutely. Absolutely. Apple, obviously, we're going to see more stories like this. Twitter, man.
As capitalists, Tim, most capitalists will agree that there's problems within the economic design.
Oh, of course. Yeah.
Okay. But capitalism is absolutely the answer to our problems.
That's right. Twitter bans about 150,000 QAnon users. I think you'll see more of that. They're trying to stamp down on it. You know, Jack Dorsey, he's pretty direct with
I
this
don't
kind of
want to
stuff.
touch the QAnon news, dude.
I don't even know
I
who
don't
what
have
that
any.
is, but I just saw the banned accounts. I think you'll see
Just
more of
go with
this.
me. You don't want to touch that news
I'll
either.
leave it alone. I'll leave it alone. Pfizer and BNTX, more virus news. They got a big contract, I believe, with the government. A bunch of stuff going on there. We're going to see more of this. The response for Pfizer here today was very, very positive. Earnings coming up. Mark, do you have interest in this company, PFE?
Pfizer, I've only mentioned it. Matt and I have like a 1 or 2 year bet on Pfizer for a steak dinner, you know? So I like Pfizer. I like it a lot more when it's at the lows than I do when it's at the highs. Pfizer's a good company, diversified. And listen, don't be surprised if Pfizer wins the vaccine wars. As far as infrastructure, talent involved, there's a lot of candidates, a lot of people, but, obviously they've been tremendously benefiting from a string of vaccine news over the last 3-4 weeks.
Yeah, and obviously these contracts coming in, I think it was over $1 billion they got from that contract. Matt, there's a bunch of other companies that are reporting tomorrow. You did mention Boeing. The United Airline news on earnings obviously still gives you concern about Boeing, but Boeing also had some other news here today as well, Matt. Some delays on getting that 737 out into the field
let me
again.
give you some shocking breaking news here. Delays on the 737 MAX.
Yeah. Shocking.
Right? Shocking. But no, the FAA and Boeing, just to remind people, are going through the process of recertification of the Boeing 737 MAX plane that's been grounded for the previous year and really hasn't been in the air since about a year and a half ago now, right? And the MCAS system obviously is what was the underlying software problem. But Boeing came out and basically said, even if things go great, we're not looking until probably November or December. But they're still going through software updates, Tim. I mean, we're 2 years into this process with Boeing, and we're still talking about software updates. They're still, and one of the biggest kickers here is pilot training on the Boeing 737 MAX, which has been delayed, obviously, for different reasons as well. So just expect that to be delayed a little bit more. I took it with a grain of salt, and I think the market took it with a grain of salt. This is something we're very, very familiar with Boeing on. So it's just furthers that news cycle in Boeing that we're probably going to be talking about recertification of the 737 MAX in January.
I still have long-term interest in the company. That compression pattern as it's kind of moving here neutral. I mean, the market doesn't seem to care about these any delays here, Matt.
I understand what deep value is. I have a interest in Boeing at deep value.
$100, something like that.
The price, like when you're assessing deep value, it's more about understanding intrinsic value versus margin of safety than it is price point. Price point's only a part of it, because at $100, could I be interested at 100? Yes, I could, but you would have to look at the fundamental situation at $100 at that point. So could it be 100? Could it be 80? Could it be 50? I don't think that. I don't think there's an answer to that question there.
Some deep value price though. Yeah, I think it absolutely should be on a target list for traders and investors out there. That's all the news I had there for today, boys. I think tomorrow's going to be very exciting with the Tesla, with the Microsoft, more earnings roundups. We'll see if this metals breakout can continue. Yeah. Final thoughts.
Oh, everybody's waiting for those 2 reports today, right? Everybody is. But my final thoughts are, it's not just Tesla and Microsoft that are reporting tomorrow. You also have Southwest, which is a very important report for the airlines, obviously, especially after what we saw with United Airlines. If we see what we saw with United, and we see it with Delta, and we see it with American, and we see it with Southwest, those 4 big, airlines out there, that could be something concerning for the industry and not just United. So tomorrow with Southwest, that's going to be an important report. You also have a couple of value, plays that are important. AT&T, very important from a value investing perspective. AT&T, a dividend payer out there, so they report earnings tomorrow. Copper, we were talking about FCX yesterday, talking about the run in copper that we've seen, really develop over the last few months, and copper at $3, a break above $3. really legit trading signal there. Well, FCX reports earnings tomorrow as well. One that I know Mark probably is looking forward to as a former professional gambler, and obviously somebody who has a ton of interest in the casinos. I think, Mark, MGM is kind of your target on the casino. Am I correct? That's the one you're kind of.
I've sold so many naked puts on MGM over the last 5-6 weeks. Look at that range. I like MGM because they're really trying to make a push into the DraftKings arena of online betting. And I think they're really positioned well with their BetMGM app to do that. So it's a sneaky way for me to play that space while still looking at a discounted thing. So I like MGM a lot. But
you're gonna get kind of that first report that really impacts this area of the market with Las Vegas Sands here tonight as well. Las Vegas Sands important in terms of this industry. There's been so much news about the reopening theme here with this industry and in the casino space. So Las Vegas Sands to me is a fairly important one. CMG tomorrow.
I was wondering if you're going to bring up your
I'll
burrito.
bring up the worst burrito company in human history. CMG, or let me rephrase, the most overvalued burrito company in human history. They don't have the worst burrito. Their burrito's dirty. It's fine. There's nothing wrong with it. But we're talking about a big time high flyer in CMG here. CMG reports earnings. Can they justify the 30% increase in price they've had over the course of the last 3 months? Can they justify that with their earnings numbers? So I think that's a very important one as well. So my final thoughts are, today, tomorrow morning's earnings reports, these are the earnings reports that are really drivers this week. These are the ones we've been waiting for this week. And so, today's earnings roundup, there was a couple important reports there, but nothing like what we're going to be talking about tomorrow. So make sure you're back with us tomorrow as we, rock and roll with Tesla, Microsoft, FCX, AT&T, Railroad, CSX, Tackle 25 stock reports earnings tomorrow as well. Southwest Las Vegas Sands and CMG on an earnings roundup tomorrow.
By the way, Dina says, don't knock CMG. I made 40K on them earlier this year. Dina, congratulations. Golf clap, by the way.
No. I'm not, Dina.
How many burritos is that?
You can buy a lifetime. CMG should give you a lifetime deal of that. I'm 100% with you on board making money there. But come on, we're talking about a burrito company. We're talking about a company that has a PE ratio at 93.
Now I'm getting hungry. So now it's lunchtime.
Dina, in celebration of your 40K, I'm going to CMG today.
Nice.
I'm going to go get a filthy burrito and I'm going to dirty that up. I'm going to go, what's it called? I'm just going to throw everything in there. It's not animal style. That's in and out.
Dude, I don't know. I don't use the lingo at CMG. I'm a taco truck dude from back in the day, but I do appreciate.
I'm going up and I'm helping your investment there. I'm going to go buy. I'm going to go buy some burritos for me and my entire family. We're getting it on.
I think the trick with ordering at CMG though, do half rice, everything else, and then have them, I think you say toss it or something like that, mix it. And then they mix everything up, then they wrap it up. It's a beautiful thing. I'm hungry now, Dina, and congrats on the profits. Wonderful, wonderful, wonderful on that. That's pretty cool. Guys, that is our show here for today. Final thought for me, we've got our event here tonight, 7:00 Eastern. Make sure you come and join Coach Tyler Craig. I'm excited to see what he has to do. Very creative, very interesting. And just kind of a fun way to teach the topic, in my opinion. I know options can be a little intimidating, and I think he's found an angle that might be palatable, I think, for new traders, new investors who've never learned about options before to really try to understand it. So if you've got friends, family, things like that you want to introduce the options market to, tonight would be a wonderful event to bring somebody to. 7:00 Eastern Standard Time is when we go live. And then for pro members, we have a Mind of a Trader at 8:30 tonight with Coach Gino. He's going to be covering some of the concepts that he's been paying attention to in the options market recently as well. So kind of a double dip here tonight. You know, we got the YouTube show at 7, the Mind of a Trader at 8:30. Come back and join us. And by the way, if you're watching our channel for the first time, subscribe. We do this every day. We have a lot of fun. I think you'd love the channel, love the show. Keep coming back and joining us. And everybody else out there, we appreciate you guys so much. This events page, Matt, is one of the best places for somebody to go and just find out what we're doing here at Tackle Trading, right?
Yeah, the events calendar is just webinars we have for our pro members or what we do on YouTube. So it's a great way to kind of understand when we're live on different programming.
Yep. All right, guys. Great job, Matt. Great job, Mark. Everybody out there, Team Tackle. We will see you tonight, 7 o'clock.